Good afternoon. Myself Dinesh from Fundamental Research. I will be discussing about the second quarter earnings preview. On aggregate basis, the earnings for the Sensex companies is estimated to grow by 2% YOY. However, excluding oil, the Sensex companies are expected to post earnings growth of 8.5% YOY compared to 10% growth seen in the first quarter of FY13. Looking at the breadth of the earnings, the breadth remains poor. 12 out of 30 Sensex companies are expected to report decline in the profits on YOY basis. The extent of decline could be anywhere between 6 to 40% spread across sectors such as RIL and metal sectors, which are expected to show decline in the PAT. Now, looking at the revenue picture, the revenue growth is clearly slowing down. On aggregate basis, the revenue growth would be around 12% compared to 17.3% seen in first quarter of FY13. The key reason behind slowing down revenues is slower economic growth and contraction in the demand environment. Some of the sectors like IT, pharma would continue to post more than 20% growth in revenues, mainly due to deterioration in rupee. However, in general, the revenue growth is seeing pressure. It has declined from 20% plus growth 2-3 quarters back to about expected to come down to 12% in the coming quarter. On margin front, the margin for the Sensex companies excluding banks is expected to decline 40 basis point quarter in Q2. We expect operating margins to contract to 18% from 18.4% in first quarter. The sectors which will face margin pressure this quarter are mainly auto, IT, oil and gas and telecom. These sectors will be seeing margin pressure, whereas some sectors like FMCG or pharma will see some uptick in the margins in the Q2. Now, the earnings growth for the Sensex this quarter will be driven mainly by banks, IT and pharma sectors. Banks will be showing growth of more than 24-25% YY, mainly due to strong performance by the private sector banks and also due to the low base of PSU banks profits. With regard to IT and pharma, both sectors will be helped by the deterioration in the rupee. Pharma sector will again benefit from the new product launches. However, sectors like RIL or automobiles or telecom will continue to see decline in their earnings in Q2. Now, coming to the outlook on the markets, we have seen that the earning downgrades have been quite insignificant in the past few months. That shows that the most of the concerns are factored into the stock valuations. Going ahead, the government's ability to implement reforms and RBI, the pace of RBI's monetary easing will determine the amount of upgrades. Currently, the Sensex is trading at about 10% discount to 12-month forward, 10% discount to to the long-term average. Looking at the long-term picture, the current valuations are still supportive. We had discussed the individual earnings previews earlier. Thank you.